What's up, everybody? We are back with another edition of the Ad Podcast today, broadcasting from beautiful, sunny San Diego at TechCon SoCal on the campus of San Diego State. And we have Ashley Keating from Lantry Partners here on the show. Ashley, thanks so much for coming on.
Thanks for having me, Dylan.
Yeah, of course. So how'd it feel to kick off the show? You were the facilitator of the main event, the first out of the gate.
Yeah,
set the tone, set the energy.
That was fun. We added a fifth panelist last minute. They bumped us up to the big room. So we walked in and they were like, "Oh, we get the main stage." I said, "Of course you do."
Awesome. Well, do you want to start out with just kind of locating the audience? Tell us a little bit about yourself, what you do, how do you play in the venture and tech world?
Sure. My background is primarily in finance and M&A transactions, investing, and then strategic board work, kind of all tied together.
Investment banking as well?
No, just venture investment, basically.
Perfect. Yep.
So the reason I am here is that I spent 9 years at a seed stage venture capital firm called Cinyc Tech in Cincinnati, Ohio. I just transitioned out and hung my own shingle called Lantry. And it's focused on consulting with emerging fund managers and high growth companies, doing a little bit more customer discovery and what the market needs. So I'm here because I know several of the folks in San Diego, and they were interested in me bringing a Midwest flavor, some insights from the ecosystem in the Midwest as it's continued to grow its venture ecosystem.
Yeah, I love that. So let's start with your broader take on 2025 ecosystem in general. Do you think 2025 is going to be a better year? You feel like more capital is going to get deployed, more Series A is going to get done? I've talked to a few founders that have expressed the idea that the floodgates are opening. Would be curious to hear your take on what do you think 2025 is going to look like?
I don't know if I'd call it floodgates, but I do think there will be an opening.
Nice.
It's going to be probably driven by exits, right? So some liquidity at the top, if you will.
Sure.
Will reignite some interest and confidence and get the capital flowing. I am not overly optimistic that the percentage of companies that have successfully raised a Series Seed round and go on to raise the A successfully is going to go up too significantly. So one of the stats that I mentioned at the beginning of the conference when we kicked it off was that 13 to 15% of companies that raise seed go on to raise Series A successfully.
Wow.
And it used to be around 20 to 30% before 2020. And that stat's according to Carta. And so that's a pretty significant drop. I'd love to say that it's going to increase, but candidly, I think milestones have shifted, and it's just a higher bar. So while I think that the checks will continue to flow, I still think that the bar isn't going to be lowered in 2025.
So still high standards on revenue, customer acquisition, retention, all the things that were so neatly pointed out yesterday.
The valuations from 2021 burned some investors and founders.
Yeah, that makes sense. So you talked about liquidity at the top. Are you talking about private equity, or are you talking about more general corp dev, or are you talking about IPO markets?
Really all of the above. Is if you're a founder, right, you have two primary ways to exit. It's either through M&A or through an IPO. More are going to exit through M&A. It could be to private equity. It could be just to a strategic. But I think it's all been slower. Certainly the IPO market has been pretty dry. So I think all of it, opening, even if it's a piece of it to start, will help create some confidence.
What do you think about the SPAC markets? You think that's overplayed and done?
Generally, yes.
Yeah, makes sense. So tell us a little bit about the state of Silicon Plains. It feels like obviously San Jose and the Bay Area continues to drive a lot of the conversation, but I feel like maybe the post-pandemic work from home, digital nomad state of things has also flattened the world a bit and made venture more dispersed and across different geographies. There are some states with local tax incentives that are creating some environments that are more attractive. What is the state of venture kind of in your neck of the woods?
Interestingly, I think the seed capital has, albeit it's been harder to raise in general because of the market, and especially in an area where capital is more sparse, for example, than, say, the Silicon Valley. But I think the real gap we're seeing right now is the Series A level across the Midwest. So I'm excited because I know there are a few things in the works to try and alleviate that. And I do think there's, again, with more exits and more successful stories, that the opportunities are there. And I'm happy to see that. I think they'll get through and be one of that 13 to 15%, for the ones that deserve it. I mean, that's the key. Are
there any companies that you're working with right now that you want to highlight, talk about, that you're excited about?
Sure. One is Aubre. It's a K12 EdTech company. They actually had a Series A led by a coastal firm, Peakspan Capital, and are scaling at the moment. And then I'm working with a smaller company called Team Central. It's a data infrastructure company. Two co-founders that are pretty relentless and building something interesting right now to go back and fill their seed extension, and they're on the path to Series A. So know that they've got to build their story to land it.
Let's go. Yeah, I feel like the EdTech space continues to be pretty exciting. Like, what a great place to disrupt based on the fact that America's like 49th or something in the developing world and the state of education, and there's just there's a demystification of like whether university is necessary or not. I don't know, it feels like there's a lot of opportunity for disruption still.
Yeah, and this team is highly focused on K12 EdTech, and right now with school budgets facing a lot of harsh reality, actually the headwinds in the industry could be tailwinds for Aubre. They could really help the schools, which is, I think, the most fulfilling part about all of this, the schools and the students.
Yeah, that's awesome. So top takeaway or insight from your panel yesterday?
I would say it's probably the fact that often founders are going to raise their Series A too soon. I mean, that was really because I see that. I think I see that, but it was well said in that you have one bullet, right? And founders don't often get a fresh second look. So if you're going to go and pitch that Series A for that Series A round and get the Series A lead, know to do it when you're ready, and build the people around you who will help you get ready and be honest with you on whether you're ready or not. And if you need some extensions, the safes over safes right now that are happening. I did learn from Howard Coe at Morpheus, who's a Series A investor. He said, look, it doesn't have to fit one mold. As long as you have a story and a reason you are where you are, it can be compelling.
Yeah, I love that insight about only having one bullet. And I forget the gentleman's name, but the founder of events.com also mentioned the best time to raise money is when you don't need it.
That is true.
Love it.
It's all about leverage.
Right. So any more talks today that you're excited about checking out yourself? Anybody that you're excited to meet?
I think I'm missing it right now, but it's the
sorry.
Oh, that's okay. The AI, I forget the exact name of the topic, but just making sure that AI stays in the best vein, right?
Right.
The ethics.
The ethics
panel.
Thank
you.
Yeah,
Couldn't come up with the word.
I interviewed a gentleman who is going to be on that panel. The idea that brought that up was we talked about some of the return to the office policies and the fact that employers really want to understand workplace productivity across these work from home cohorts, people that are quiet quitting or, working 3 jobs. And, but he talked about the idea that, you want to be really careful when you're trusting AI to make decisions about people's employment and, what are the false signals and can you really rely on that data to be completely accurate without the context of their manager and some of those things. But
right. And there's a level of Big Brother. How much are we willing to tolerate?
Yeah. So I was at CES last week. Every panel was about AI at an electronics show. This does not feel like the hype cycles of NFTs or Web3 or crypto or the metaverse. It feels like it has staying power. What about you? Hype cycle, or is this the future?
I definitely think AI is the future, but I also believe that there is a lot that will flush out of all of this AI investment. Not all AI is created equal. And so, it's an interesting time to be an investor, an interesting time to be a founder. But there's kind of, it's a moving target right now, I would say. And so it's very early days. But I am bullish on the sector overall. I think there's a lot. It's a kind of a true wave of change that I think is going to be for good.
Love it. So where can people connect with you if they want to learn more, get in touch?
Sure. My LinkedIn is Lantry, and then also I am on LinkedIn and Twitter.
Awesome.
At Cinyc CFO, I think is my handle from when I was CFO, but
Let's go.
I keep rolling with it.
Awesome. Thanks so much for coming on.
Thanks.
Cheers.